I'm here with the man of the moment, the Instagram and TikTok UK influencer main man. YouTube. Neil, how are you, mate?
All good, man. Even better for spending the day with you, my friend.
Lovely day in Cambridge, recording this with cowpat everywhere. You can't beat it. What a Monday. But I want to get into your trading to portfolio. So how much do you have? What do you invest in? I think you have a bit more, different investments to me, more investments. So it'd be interesting to go through and understand what you've got and why and how your approach has changed over the years.
Okay, let's get into it.
Okay, here we go.
So here it is. Boom. 181,972 now. Which
nice.
is
182, just gone up. The market's open.
Creeping up all the time. It blows my mind, this does. I never thought I'd get to this position. Background I came from. I am relentlessly obsessed with being grateful for the position I am in. Yes, a little bit of hard work. Yes, a little bit of luck. But we're here now after 6.5 years as I started on this. So we'll start with the one-day view. Markets have just tanked. I say tanked. I hate it when people use those sensationalist language.
For clickbait.
It's just the big down, but it looks big. What's the reality? 0.3% down over the course of the day. Every other metric, I haven't even checked today, I guarantee is going to be green. 1 week.
I was really hoping that wasn't going to be green.
No, red. 1 week, 2% up. And because my portfolio is at 180 now, a 2% gain.
That's a 3.5k up. It's insane.
Now, the thing is, of course, I'm not going to realise this portfolio today, so I don't bank it. But it just shows you how much a swing upwards can happen when you get a couple of percent gain. 1 month is 2% still, because it has been probably 6 weeks, 8 weeks, 2 weeks. It's been 8 weeks. It's been pretty volatile, hasn't it? Up and down. 3 months, 10 grand. So I mean, that's 3.5 grand nearly a month. I mean, national average salary.
Completely tax free as well in an ISA, which is just insane. So you've got to earn 15 grand to get 10 grand normally.
Yeah, 100%. So it's wild. Year to date, despite ups and downs,
despite World War III nearly starting, which is mental.
We had the tariffs issues, we had uncertainty with Iran, we have had oil crises, and we're 12.5% up.
And all those things you listed were caused by the same person. We won't name who.
Yeah, we won't, because you won't be allowed into the US when they check your passport. 1 year then, nearly £32,500, 23% up, and then the max view is 115%, £60,000 up. Now the reality is it's actually much more than that. Sometimes I clarify this because I have previously consolidated a number of different ISAs from different providers. So I've probably put around 80,000 in and made 100,000.
So who are you using before and who did you consolidate in?
I used Hargreaves Lansdown. I've used Invest Engine, both stocks and shares ISA and general invest account, and I had a trading 2 and 2 general invest account, and I've consolidated that in now. And
that's all in here just for the lower fees, I guess, or for simplicity?
Majority's in here because this is my job. I also have an XTB account, I also have a IG account, I have my junior stocks and shares ISA for my boys in Hargreaves Lansdown, and I like to know what they're all about. But majority's in here because, as you said, the fees are low, the interface is great, it's easy to share where I'm doing and what I'm doing as well. You'll notice as well, you can see £10,000 there in cash.
Oh yeah, I didn't notice that.
And
that's being eaten by inflation, Neil. What are you doing? Come on.
Yeah, it's a mistake.
Thought we were worth 9k by the end of today.
Oh, well, look, 3 months, 6% up, and it's probably 5 months, isn't it? So I've probably missed out on 7-8% by not putting that into the market, and that's a mistake. And it's because I've been thinking about what to do with it. And I've always said, just throw it all into an old world as soon as you get it. And if I'd have done that, I've gone against what I always say. But because I wanted to tinker a little bit, and £10,000 is a lot of money, but it is only 5% of the portfolio. I was trying to pick up a couple of stocks because I sold a load last year because I put them all into my old world because they'd gained. But I wanted to get a bit more diversification now further into some dividends because I really like getting those dividend bit coming through. But I've done nothing with it. I haven't acted on it, and it's a mistake. So I will get it in this.
It's one of those things, though, because I say the same where, like, if you've got cash, just get it invested. And it's easy to say. When it comes to your own investments, you always do feel like a little bit, I'll wait, I'll pick something else. So I know exactly what you mean.
And it's something I was talking about with someone earlier, because if you have debt, like if I had £10,000 worth of debt, your goal is zero, so you throw everything at it. When you're investing, the most sensible thing to do is on a monthly basis, or lump it in. But you haven't necessarily got that goal, so it kind of changes the direction a little bit. But listen, that's where we're at. I got 10,000 in cash. which needs to get applied. So going through the positions, the first one.
So what investments do we have here?
Is my Invesco All World. This is FTWG. This is the distribution version. It pays a dividend again, just because I like those dividends.
I was going to say, you're one of the few people I know who has always used distributing versions. I'm a big fan of accumulation, but I know you've said to me in the past, you like seeing those dividends hit your account, get bigger, because it keeps you motivated, yes?
Yeah, and I have a very simple spreadsheet where I track it. My first year, I made £66 in dividends, which was 2,000. Last year, I made just short of £3,000 in dividends, and tracking that,
big increase.
It's awesome. Now every penny goes back into the fund of the business that paid it, but the biggest part of investing is the psychology, and the psychology for me, from my perspective, keeps me in the market is continuing to get those dividends. So that's an all world. You see, it's £109,000 of a £180,000 portfolio, so it's a majority of it. 28% up. That's because I changed it. So I'm about 50-60% up on my all world. I changed it from Vanguard 3 or 4 years ago when they when Invesco came out.
When this one first came out, that was 2023, I think, wasn't it?
23, was it? Yeah. Because the fees were so much lower than Vanguard now. You've done content yourself on this Vanguard.
I know. The fee war in the global ETF space is helping us all out. It's good for content.
It's only good for us as retail investors. So 109k in there. I've also got the S&P 500 distribution.
Yeah, nice.
45k in there. Get a lot of criticism for duplication.
Yeah, are you tempted to sell that, or do you want to be a little bit overweight in the US stock market as well? Is that why you've kept it?
I am massively overweight in the US stock market as a result of this approach. This has paid off.
Yeah, it has actually.
It's worked for me.
Particularly for the last 10 years, the US stocks continue to dominate.
And people often say in my comments, yeah, but you're not doing it right. This shouldn't be the way that you're doing it. You've got too much exposure. Well, it's worked. One.
I'd be one of the first in the comments saying that, but you're also right saying, looking at the numbers, it's clearly worked.
2, it's kept me in the market.
Yeah.
I enjoy being in the S&P 500. 3, I read J.L. Collins' Simple Path to Wealth, so I got very interested in the S&P 500. However, my approach now is I haven't added a penny to my S&P 500 for maybe 2 years. So that's just growth within there.
So you're just going to keep holding it there for now and just no plan to sell it or consolidate?
At the moment, and no plan to put another penny in there. I want to up that.
Just let it ride.
Yeah. Next, we got some individual businesses that have...
Here we go, the first stock.
Yeah.
Looking good, though.
They're pretty boring, right? But look, it's...
They're working.
Yeah, they're working. So I'm 23% up in Legal in General. Not only 23% up, this business pays a 9% dividend every year.
Oh, wow.
So every year I got 9% of what I've got in here, as well as 23% growth on there. It's a boring UK insurance business. It's diversification into the UK, which I have little of. It's a dividend payer, and it's diversification into a sector which I have little of. Yes, people will say Legal in General is already probably covered in your all world because there's 4% of the all world is the UK.
But it'd be a tiny percentage, right? For that.
So it's overweighted me into that specific business. It's worked. Next one,
nice.
Lloyds Bank, 122%.
Oh, wow.
Again.
Biggest percentage so far. Yep. Triple figures.
It is, yeah. And that's
wow, over doubled your... Yeah, that's an insane return. How long have you been invested in that one for?
About 4 years. Let's have a look at it, because I remember buying it around 50p. Yeah, there we go. That works out about right. 115 pence now. I remember in COVID, this got to 27 pence. So if you'd have bought in at that, you'd have a 500% return in a boring UK bank.
Insane.
So Lloyd's on that pays a dividend twice a year. It's around 3.5%, I think, last time I checked. Next one is Realty Income, which has been in the red since I bought it. But I'm comfortable with it. Everything I have in here, I'm comfortable with, otherwise I would sell. This is not a show portfolio. Even though I do show it, everything I do is for me and my growth, my financial independence. I don't buy and pick and change things because I think it will make good content.
Yeah. So I was going to say, of those three sort of stocks, well, that's a REIT, but those three positions there, is it a case of you just invest once when you think it's an attractive price and you hold it? Or are you still like cost averaging in when the price drops? Or how do you actually go about picking those individual stocks and actually putting money into them?
I haven't put any money into any of these individual stocks for about 4 years.
Okay. So just invest once, after a bit of research, and just ride it out for the long term?
Yeah, that's what I did at that time. It pays a monthly dividend, this, and it gives me exposure to UK and US real estate. That's what a REIT is, real estate property, UK language. And the way they make money is they buy a load of properties and they rent them out, and then the rent that gets generated gets paid as a dividend. 90% of it has to get paid as a dividend for it to be classified a REIT, and there's tax advantages for the business that does that as a result. Aviva next, 48%, 50% up. I bought this.
Oh, wow, yeah, a lot of green here. This is the power of just sticking with your funds and your stocks, clearly.
I bought this a few years ago. I was on a thing called Guide Point, where they would match you with investors and they would ask your opinions about certain industries. And I was an expert in a certain industry, and they would pay me...
Stock picking, was it?
No. Absolutely not.
Was it drinking?
Not with these guys. Yeah, probably. And they paid me £500 an hour. So I did 3 of them, got 1,500 quid, and I took that money and I put it into Aviva. And that 1,500 quid...
Yeah, I was going to say.
But it was originally on Hargreaves Lansdowne.
Okay.
So I put it into Hargreaves Lansdowne. I can't remember the numbers. Got 30-40% up in Hargreaves Lansdowne. I sold it and moved it across into here when I did that. And then that 1,500 quid that I got for free, it was probably less. Yeah, it must have been less.
It's now over 3 grand. Not a bad return.
Over 3.5 grand for 3 hours work.
Infinity percentage return of that, just your time.
Well, we can't discuss that one. And Virgin Galactic I keep in there always because it's a reminder not to be an idiot. So that's
oh, wow, yeah, down 90%. So was that the thing where they were going to send people to space? And did it fall through?
Richard Branson was going to send people to space. He still is. It still is an operational business, but he took a load of money out of the business. He sold a load of stock just after they did a launch. He diluted a whole load of shares. He just screwed over people that were invested in it. You look at the...
Let's hope SpaceX doesn't take the same fate with everyone invested into that.
Yeah, well, that's about 30% down, isn't it? Oh, we'll come on to that, actually. So there it is. So that's when... it was $920 on May 2021. That's when Branson sold all these shares.
That is insane. And this probably actually is the danger of stock picking, where you can get really unlucky, and it'd be very unlikely in an S&P fund or all world fund to lose 90%. But individual stocks might even go to zero, like Blockbuster or Toys R Us. So 100%. It's just so hard to predict.
You never know. And then the last one is I put £1 into SpaceX because I was,
just for the content.
Just for the content, yeah. I was doing some content on it, and I wanted to see what I got bought in at and how it traded. Now the other thing that we're missing here is I have sold a load of businesses. So
yeah, I was going to say. So they're individual stocks that you sold?
Yeah. I 10x'd Tesla. I 10x'd Rolls-Royce. 500% Alphabet. 500-600% Microsoft. I sold all of those within the last couple of years and put all of those profits into the old world. That's the approach.
Because I find the thing of individual stocks is, although I don't do it myself, I think when I think about it, the hard part is actually when to sell. Yeah. Because a stock could... If we look at the chart for Apple, it seems obvious it's, up thousands of percent, whatever, over 20 years. But then there were so many dips along the way, so many times it was up massively, then down. What actually made you, I guess, pull the trigger on actually selling those specific shares and getting in all world? Because you might have timed it well, you might have timed it poorly. Or was it just you were happy to take some profits off the table and reduce your exposure to those stocks? What was actually the trigger that made you sell those positions and put it in your world?
It's a very important question. And the approach that I take is no one ever went poor selling banking 10x's. So let's use Rolls-Royce as an example. I bought Rolls-Royce at 80p. I sold it at £8. It's now £16. So if I'd have held it, I'd have doubled my money again. But I 10x'd my investment.
Yeah.
I 10x'd my investment. No one ever went poor banking a 10x. So that's the approach that
I like that quote, actually.
So I did that with Rolls-Royce. I did that with Tesla. Microsoft and Alphabet and a couple others I can't remember off the top of my head were 500-600%, and I was just like, I'm happy with that. I'm going to take that and put it into my old world, and then it increases the return overall. And as a result, that's why I've turned 80 into 180.
Yeah, I was going to say, 'cause even though you have got quite a few individual stocks there, if you actually scroll down against your investments, really, what's that, 150-ish K, the large bulk, probably 80% is still in those two funds. 90%
in those two.
So most of it's in that money, and then the stock picks are just for a bit of fun to essentially keep you interested and just...
Because I enjoy it. And again, I'll reiterate it, I am not building a portfolio that looks sexy and cool for social media. This is for me to retire off. So I ain't pissing about. I'm not going to mess about with that sort of money. This is my retirement.
Speaking of your retirement, come on to that next. Am I right in thinking you want to get this to 500k? Is that the plan?
540.
540. That's your magic number you've worked out.
540.
So how did you work out that number, and how long do you think it's going to take you to get there?
540 is my magic number, yeah, because it allows me at a 5% withdrawal rate to take out £27,000 per year at 50. 50 to 57 is when I'll use that as an ISA bridge to get to my private pension, which will be worth around 700 by the time I'm 57. That is all because I'm a pretty frugal guy. I enjoy my life. It's a Monday afternoon and we've just been for a pub lunch.
Yeah,
right.
Nice pint of Guinness.
It's not a bad... Captain Guinness here. It's not a bad life, but I can do it frugally and I'm comfortable with that and I'm not missing out on anything. And the second part to your question there was how long do you think I'm going to take to get there? So in order to get there in here...
Because you're actually exactly a third of the way there now.
I am a third of the way there. And market dependent, if the markets continue at the current rate that they're going to, I will still need to max my ISA every year until I'm 50. I'm 43 now in order to achieve that. So there's a lot of ifs, buts and maybes. But that's why I have a business as well, and I've been investing on the side through the business investing account. So there's two approaches to take.
So essentially then the next 7 years, you'll get another 140 in here to get you to 320, and then hopefully there's another 200k-ish gain from the market, and then you hit your number.
Can tell you're an accountant.
I know, quick maths, no spreadsheet required there.
Yeah, that's the approach.
No, Neil, that's perfect. Any final words of wisdom to say before we end this one?
Yeah, this one's really important. So Neil Invest on YouTube, Instagram, TikTok, Facebook, Threads.
OnlyFans. Cheers, Neil.
If there's enough customers, I'll do it.
Yeah, I was good. Premium investing content. They're the real portfolio updates. Stay tuned. Cheers, Neil.